I must say, incredibly inspiring to listen to Anna and Staffan talking about their ambition in making Stockholm a global capital for impact investments and businesses. And as Ingmar put it in his speech now, innovation, technology, sustainability, these have been historically part of the DNA of Sweden. And Stockholm in particular is one of the top ecosystems in the world for tech entrepreneurship. And this is no coincidence, like also Ingmar said, but I do firmly believe that the city has played a critical, strategic, and an enabling role in making Stockholm a unicorn factory. And it is therefore extra exciting from my end to hear the commitment from the mayor and the CEO of Stockholm Business Region expressing their commitment to channel such energy in enabling those that tackle the world's greatest challenges, the problems that matter. But as Ingmar put it beautifully in his lightning speech, we do need to feel the urgency and turn our ideas into action, and we need to make it happen now. It is really truly alarming that only 1% of the global capital allocation goes to impact businesses. And therefore, in this panel, we will talk about impact investing and what we need to rethink and do in order to accelerate the change that we need to see in the world. So my name is Funda Sezgi, and I have the great pleasure to moderate this panel, and thank you all for joining me today. We have very limited time, so I will avoid long introductions, and I believe that our tech-savvy audience have done their homework or know that our profiles are just one click away. But we have 3 investors in the audience and 2 ecosystem players. Melanie from Bethnal Green Ventures, Richard from BlueOrchard, Erik from Gullspång Invest, and then we have Staffan from Stockholm Business Region and Jesper from Impact Hub. And we have big problems to solve and then limited time, so I will jump right in. And Melanie, I'd like to start with you. Bethnal Green Ventures is an exemplary organization. It's one of the leading actors in Europe, focusing on early stage tech for good companies. And I just want to ask you, why do you think that we as impact actors need to make a distinction and emphasize tech for good as a category in and of itself?
Sure thing. Well, thank you, Funda. Thank you for having me this morning. It's a pleasure to be here. I think it's actually afternoon in Stockholm, so I'm on UK time. Yes, so Bethnal Green Ventures, where I work, we are a leading early stage investor in tech for good, and we define tech for good as companies that use technology to intentionally deliver positive impact for millions of people, both in terms of serving underserved audiences and markets and groups, but also for the planet at large as well. And I think the reason we think tech for good is so important as a subset of impact investing, but also why impact investing in the broader sense is so important, is because the multitude of extremely pressing problems that we face as societies and as a planet at large, and Ingmar, obviously, you talked very eloquently about the kind of the pressing nature of the crisis, really means that simply avoiding harm when making an investment decision is not enough. ESG seeks to minimise the negative impacts of an investment decision or how we allocate capital, but we genuinely believe that actually, in order to achieve the Sustainable Development Goals, in order to achieve net zero and reduce carbon emissions, we have to actively invest in solutions and in technologies that genuinely bring about positive outcomes for people and for planet. And that's what we do when we think about tech for good. We are looking at what are the opportunities that technology itself intrinsically can bring in terms of scale, efficiency, economy, reach, that mean that actually we can tackle these challenges in new ways. And in some ways, it's actually a real shame that only now are we starting to point that huge amount of power at the biggest and most pressing challenges that we face in a generation. And that's why we think it's so critical that impact investing really does become a significant piece in terms of people's asset allocation strategies, but more importantly, should actually become the norm. It should be the benchmark and the de facto standard, rather than perhaps sort of sitting off to one side as a nice to have.
And just to follow up on that, Melanie, for the challengers out there of the impact category, don't all entrepreneurs create impact by, for instance, creating jobs?
They do. I think from our perspective, Tech for Good is about an intentionality of impact. It is about an identified positive outcome, which is intrinsic to the product or the service that you are building. So we want to see specifically things that help people live healthier lives, achieve a more sustainable planet, a better society. So it's that kind of intentionality that we focus on when we say Tech for Good, rather than the broader benefits that you could argue any purpose-driven business might bring about.
I agree. And I think it would be ideal if one day we had to drop the word impact from investing and all the investments had positive impact anyways. But Erik, over to you then. At Gullspång, you have been making impressive investments left and right, and some of which are Oatly, Trine. I guess everyone in the audience knows about Oatly, but Trine is a fantastic company also that is facilitating solar investments in emerging markets. So, like, what percentage of your portfolio would you consider to have an impact focus?
Sorry, I didn't quite get the question. Can you repeat it?
What percentage of your portfolio of companies would you consider to have an impact focus? Like, are they all impact companies, do you feel, or do you also invest in regular businesses, so to speak?
No, I would actually say that they are all impact companies. We partner with entrepreneurs that are passionate about solving the largest issues of our generation. So I would say they all have a very big agenda. Also, we are a family-owned investment firm. So for us, it's in our DNA to look for the next generation and not for the next exit. So we are. It's really important for us what the overall mission and contribution is for the company in our portfolio.
So if we go back to the question of the panel, which is rethinking business, how do you think they're done rethinking in terms of their business, if we compare them to regular businesses?
I think we live in a paradigm where the economic return is the most important. But as we all know in this forum, we have to look at the social consequences and the environmental consequences of the companies that we both fund and host. I mean, go to the moon and you will see 7 to 8 billion people that are very busy creating a lot of value, while we actually erode the very base of our civilization. We live in a time, as Ingmar said, where we might be the first generation in human mankind that actually feel the boundaries of this planet we live on. And we should remember this planet is the only planet in the whole universe where we can live. I think in the future, I mean, all economic activity will be positive or neutral in respect to this resilience of the biosphere. That's the end game. I agree with you. Impact shouldn't be a separate category. It should be the norm for investing.
And like on the demand side, and I guess I can ask that to all the investors out there or the ecosystem players from the consumer perspective, do we see any increase in demand for these companies and solutions, or do we see any global shifts that justifies what we are saying?
Well, I can start. We target the food system and also renewables. And we see a lot of strong forces joining and creating a demand shift. We now have, looking at the food system, products, they're more sustainable. They have better performance than incumbents. The price is attractive. And usually there are some innovations in the base of this product that makes it viable right now. So, and then you get some really strong brands, Impossible Burger or Oatly, that drive consumer interest, and consumer interest tends to drive investments and so on. So you get a very positive spiral. So we think it's really interesting to follow the food system right now. Look at the market for alternative meat production, for example, expected to grow 15% the coming 5 years, while the traditional meat industry is projected to not to grow at all, or alternative milk in the US is already 50% of the market. So this shift is actually happening.
Yeah, so we can hopefully overcome those barriers, misperceptions that you need to let go of your profit in order to focus on impact, right?
Yes, I mean, for us, impact it's not good conscience with bad returns. It's actually solving urgent problems at scale. And if you solve our generation's most urgent problems, you should be rewarded. So it's also very profitable.
Yeah. Please feel welcome to comment, other members of the panel. Otherwise, I'll move on.
I would love to jump in if I can. I like the discussion around profit and rewards, because in my head anyway, as representative from one of the largest sort of ecosystem builders, Impact Hub, we've seen this emerging from a long time ago when we rebranded from being the hub to Impact Hub. We talked a lot about, it was an intense discussion about what is impact? What does that name actually mean? So what does impact investment actually mean? And what is the reward? Because impact, as I see it now, goes alongside the financial returns. But wouldn't it be enough, to only have an impact reward rather than a financial reward for your investment? Isn't that, if you look at it very long term, we actually build a system for investment. It goes back hundreds of years, right? And that is actually what created the problems or the challenges that we see ahead of us. And now we just, adding a layer, say, hey, let's do impact investment, and we see this as a good opportunity to make a financial return, right? And that's good, right? Because now we're focusing a little bit more on what we are actually investing in, but we're still using the financial engine that built the whole system and that put us in the position where we are today. So my question really is like, how do we shift? How do we, add knowledge that we don't have, to these new challenges? So I know that Funda, we talked a little bit about, what is the role of the ecosystems to drive, impact. And you mentioned earlier as well that everything we do have an impact. So it shouldn't be a question of impact investment. It's like investment, and it all has impact. But what kind of impact do we have? And Melanie mentioned it as well with targeting, tech for good, for example. But I don't have all the answers. I just know that we have challenges in understanding what impact means and understanding the challenges deeply before we start investing, because it's very complicated. The ecosystem is super complicated. There's so many different actors in it. But and giving it to Staffan, maybe, as a city, I think can play a huge role, for example, in procurement of investment that is $1 million business, and then following up on pension schemes, etc. Right? These are the big engines that I think could turn the wheel to see that what we do, what we invest in, actually would have a positive impact, and whatever that means. So,
would you like to comment, Staffan?
No, it's very true, and I think that the public procurement is one important tool in this. I'm very proud to work in a city that has been focusing on environmental issues for a very long time. We were appointed the first green capital of Europe back in 2010, and working with the investment, and there's a lot of building going on in Stockholm. We've shifted how we are doing that, and we have now as a requisite for all that wants to build anything in Stockholm that you have to meet extremely high environmental standards. There's one way of doing this, but I think also that the city and we at Stockholm Business Region can function as a neutral ground to get the different players together, as we are doing during this track, because I think that we can bring some trustworthy knowledge to the table, and we can, as a neutral player, bring people together in an environment that is booming with startup, in an environment that is very, very clear on that we have to solve these issues. I think Erik put it very well there. We have these planetary boundaries, and you have a knowledge and a common understanding about that in Stockholm. So this makes for a good environment to start.
Definitely. And I do agree that impact investing is one angle of it. It really takes a whole village to really create systems change. So we all need to act together. Of course, there is great value in attracting capital and talent to what we are trying to do so that we see more of that happening. But I firmly believe that we all need to play our parts in this for change to happen. But Richard, I would like to throw the microphone at you. BlueOrchard is a super impressive organization that's been around since 2001, working with financial inclusion in emerging markets. I saw that you have made over $7 billion of investments to date. I mean, that's really incredible. So perhaps an inspiration story for those that are out there in the audience. What is your investment criteria when you look at the startups? Maybe I can start with that. And I'd love to understand also how you see the performance of your companies.
Yeah, so absolutely. So I think when BlueOrchard started, the theme of impact and the branding around impact wasn't really a term back then. And it was really about ensuring that the most vulnerable in society weren't left behind. So really focused on developing markets, and that's still the core of our business. We believe that to be considered impact, there have to be clearly defined and measurable social or environmental impact goals, and then these need to be regularly measured and managed. And so when we look at our portfolio, we'll list a number of KPIs on any investment ahead of investing, like we would do with the financial projections as well. And then we will track these and measure these. So the vast majority of the investments that we've made are in the microfinance industry, and we would look at number of loans dispersed to SMEs, percentage of these loans that go to females, and a number of other metrics which we then use to track the social impact that our capital is having.
And how would you compare the financial versus social performance of your portfolio companies?
So the financial performance has been pleasing, and I think that's part of the reason that the business has been able to grow. One of the reasons for that is that we've been able to put together blended finance mandates where we can attract capital that has at times more flexible returns and more of a social developmental aims behind it, and that allows us to attract more commercially minded capital alongside that capital, and then a blended return would be reasonable, but because of the way that the instruments are structured, the commercial capital actually gets a commercially satisfactory return. I think also, these investments, the level of correlation is significantly, or they are uncorrelated to many of the developed market products out there, and so it also offers attractive diversification for institutional investors.
Great. Yeah, I mean, there are lots of studies showing that those that are making sustainable investments are in the long term making better financial performances, but I think we still have a lot to prove still. Like role models of success like Oatly are crucial for making a stronger case for impact. And Melanie, how is your portfolio performing? And do you have any impact measurement tips and tricks that you can share with the audience?
Yeah, sure. So our portfolio, we've made hundreds of investments since 2012, and our portfolio is now over 70 live companies, which range from startup to post-Series A scale-ups. Because we invest so early, we work really closely with our companies to define and understand what their impact is and how they're going to measure that. And we expect that to evolve and change and become a lot more sophisticated over time. But if you boil it down to the essentials, when we're looking at a company and trying to understand whether we consider it to be tech for good, to have that intentionality of purpose around it, we're really, really excited by businesses that are building products and services whereby it may not be directly linear, but essentially for every unit of good or service that they sell, they have incremental positive benefits and achieve that outcome that they are looking to bring about. So in our view, the hugely valuable companies that we want to build, generating venture scale returns, the reason we think that they could be worth hundreds of millions in the future is because actually the positive social or environmental value that they are building that is intrinsic to their business model is a key part of what makes them so valuable. So that's why we actually express our own investment criterion in terms of not only the size of the ultimate enterprise value that we want those businesses to achieve, but also the millions of people, the scale of impact that we also want them to deliver hand in hand with that. And from an impact measurement perspective, there are lots of different approaches to impact measurement. It's a huge field, and there is no time here to talk about all the different options and frameworks and approaches. We use things like theory of change. We look at the impact management projects matrix as some of the tools that we talk to our teams about. We often sit down with them and talk about mapping unintended consequences. We think that's a really big part of not just looking at what is the good that you achieve, but being mindful of what might you inadvertently or otherwise be doing that is negative. And we think that's a really important part of actually helping companies really define their strategy and direction. But for KPIs and measurement, we really encourage entrepreneurs to pick things that actually are really useful commercial metrics that you would use anyway to understand if you were achieving your goals as a business. So think about user engagement, think about how do you show that you are delivering value and benefit to your users and customers. That's probably a really good indicator. If your business model and social impact or environmental impact go hand in hand, those measures are probably the same, and you don't need to keep impact measurement as a sort of, another thing on the to-do list. They should be.
If we can build the habit of it early on and then start looking at those, and
that becomes second nature.
An impact measurement project, I agree, is a great tool for early stage startups to use. Actually, does anybody have anything to add to this discussion?
No, I think maybe just to add is that the field is obviously advancing at a rapid rate, and it's moving towards independent verification of these impact goals, whatever they may be at the start. And so, just as important as setting the impact goals and then measuring them is, ultimately reporting on them and being held accountable to those goals. So I think that the strides that the industry is taking to have a standard set of procedures and ways of monitoring progress against the goals is hugely positive.
Great input. And at this point, we're really running out of time. I knew that this was going to go away in such short time, but one of the taglines I love the most is impact hubs, actually. As a pioneer in the impact field, they say impact cannot happen in isolation. It requires collective action. So if anyone would like to elaborate on how can we make it more collaborative, like what requests do we have from the city or ecosystem actors like Impact Hub, please go ahead.
Okay, so I'll come through in a bone here. We have for a few years now started to develop a female angel impact investment network in different parts of the world through our network. And today we want to try and launch that in the Nordics as well. So this is a reach out. We already are in conversation with certain actors to support this, but we would love to have a conversation with Stockholm and other Nordic capitals and also other investors. And if you are a female angel impact investor, reach out to us because we want to build that network, because as Funda was saying, this is a collaborative effort, right? So we already have this network in part of the world, so we need to start focusing on the local knowledge, locally rooted, understanding the challenges locally, but connecting it globally, like we don't have time also creating that social network. We also have that as an impact hub, both physical spaces where you actually meet face-to-face, well, not face-to-face right now, physically, unfortunately, but hopefully at one point we'll be coming back and meeting each other and understanding what is it that we need and what can we contribute with, rather than what can I get from being part of a network, can I contribute to? So we are focusing on the SDG number 17, collaboration for the goals, and this is what we are doing in everyday action as well, in our space, physically and digital, collaboration for the goals.
Great. I'll sum it up, but before I do, Staffan, anything you would like to add to this discussion?
No, I think it's very, very important what Jesper is highlighting, that we have to share our networks and have to share our knowledge to be able to together reach these goals. But that's the only way we can do it. And I think that this panel shows that there is a lot of will in doing this, but there is also a good investment over time in doing this. So I think, let's continue. Let's make the future even brighter.
Definitely. And I would like to add that to everyone in the audience, just remember that the world's greatest challenges are also some of the greatest business opportunities. And tomorrow's unicorns will be built on solutions that are tackling these challenges. So I invite you all to join from whichever angle you can join. We have a lot to do.